Hi, and welcome back to uncoverfraud.com. My name is David Malamed, and I'm a forensic accountant and fraud investigation expert. Today I want to talk to you about financial statement fraud and really the difference between error and fraud. Now it really starts off with, is the error intentional or unintentional? If the error is unintentional, there's a few things that happen. Number one, there should be no hesitation in management rectifying the issue. Number two, it allows the auditor to continue their relationship with the client. And number three, errors happen. And auditing, one of the things that is important about auditing is it's an arithmetic check. It's a checking of what's going on. Identifying errors is a good thing, not a bad thing. Let's talk a bit about fraud now. Fraud becomes the intentional error. The intentional error of deceiving and hiding things that should not be done. And that could be because of stresses such as meeting management's projections, meeting sales projections. Potentially, management fails to correct known material weaknesses in internal control on a timely basis. Or management continues to employ ineffective accounting, information technology, or internal auditing staff. What does the current audit team do in preparing for an audit in terms of addressing fraud? In developing an audit plan, the auditor should discuss with the engagement team the susceptibility of the entity to fraud or error resulting in the financial statements not being fairly presented in all material respects. These discussions are ordinarily had with each member of the team, as a group or on an individual basis. Such discussions would involve considering errors that may be more likely to occur, how fraud might be perpetrated with particular amount balances, or specific identified risks that were identified and documented during the planning phase of the audit. The audit leader should consider discussing which members of the audit team will conduct certain inquiries or audit procedures and how the results of those inquiries and procedures will be shared. The benefit of discussions include the engagement team members gaining a better understanding of the potential for material misstatements in the financial statements resulting from fraud or error. It's not rocket science here. Really, it is a question of, is the company doing this on purpose or is this an error? On purpose becomes hard because there could be collusion. It could be sophisticated frauds that are occurring. Errors usually will pop themselves out as anomalies, things that aren't just ordinary. Now, there are fraud tests that can be done and can be done on a regular basis during an audit, looking for standard frauds that do occur. There are standard frauds that occur, not necessarily sophisticated frauds, but there are hundreds of frauds that occur that we know about that can be tested. They're just not being tested. So my question to you is, what are your thoughts? Do you think that having all these fraud tests available, that they shouldn't be used during an audit? Look, I think they should be. My name is David Malamed. To find out more about me and the services we offer, please visit uncoverfraud.com. Until next time, thank you and God bless.